Welcome guys, this video will be about the real draw on liquidity. This is a way to look correctly at the markets and to frame where are you now, where can you go, and in this way you will not get stuck. I will just jump straight into it. I will try to make it as simple as I can, because if a person can explain anything in a simple way, that means he understands it. So let's just jump straight into our topic today. What is draw on liquidity? This is important because with this you know what is coming next, what to anticipate, and this will help you frame your setups. So as you know about the liquidity video, we got external to internal liquidity and vice versa. Like, this is the basics. Our external liquidity is lows, our internal liquidity are PDRAs in our leg that created the swing low. In this case, once we took out a swing point, we will have a retracement into PDRA created in the leg that created the low. So we move from external, taking out external with this leg, coming back to internal. It can be order block, it can be fair value gap, it can be breaker, it can be rejection block. But this is a sequence. Once you move from external, you will come to internal, and it's how it moves. And once you flip the high that took the low, aka change the order flow, then you simply look for internal range liquidity, key levels, to sponsor your move to go from internal to external liquidity. Once this happens, this is the leg that should provide you the next move. And here you will find PDAs. And this is exactly what is going on in the markets. Let me now jump on the chart, try to find as many examples as possible. Yes, it's pretty simple. It's just that you don't have to complicate it, but you have to be careful because you can get stuck on the opposing side of the market. So once you know what range you're trading, in this case this one, on the time frame alignment, you will find anything you need right here. Once we flipped the low that took the high with speed, we did what? We took out external range liquidity, this low, inside the leg that created this low. You will find a PRA sponsorship to go for the next move. And once you break the low that took this high, because this low started the pump to go to this and this. Once you take external range liquidity, you have to come to internal range liquidity, a PDRA, inside this leg to sponsor your move down. And once we do that, we get another external taken out, and we need internal to sponsor our move down. And once we give a major draw on liquidity, we can see a retracement, of course. But the intermediate term highs created in the high that took the low can hold up the price down. Also, you will find more often than not SMTs. And SMT is the reason why targets don't get met and fair values don't get filled. Once this happened, we did what? We take measure external, going back to internal inside the leg that took the low to sponsor our next move. And once we got the external range liquidity, now we have to find an internal inside this price leg that can sponsor our move down. And right now I will just make a call right here. Once you watch this video, you will see how clear it is. What do we have here? We take this out with Thursday, and Friday will be my range. We see Monday do what? Just building more interest on the high and the low of Friday, staying inside. So in this move down, I need a key level, let's say at 50% or a little bit below or more above, to sponsor my move down, which means I would like to see something like this. And I do not have still a video about key levels, but I am going to make a video about that and how to choose what to trade. For this moment, I will mark my Friday range, and now I would need a key level to give me a sponsorship down. What I'm going to say is that I expect to see SMT created on this high Thursday and drop down, which is, I think this was Thursday, yes. I would like to see SMT like that and write this to be my sponsorship for the move down until my major draw on liquidity. This is what I want to see. I have explanation about why this inside. And once this draw on liquidity is met, I would want to see first how it is met. If we come here at the end of the week, I would like to see week for maybe open and low, took out previous week, and retrace higher to continue our bullish order flow targeting these highs. For now, I am bearish, and this is the setup I look for. I want SMT, a Thursday high, Friday as a range, swoop SMT to sponsor move down. And what's this? We have external liquidity taken out. I want to come to internal range liquidity, aka key level, to sponsor my move to a major target external range liquidity, which is a monthly low, which is above a monthly fair value gap. And we never ever tapped it. This means this is an engineered liquidity pool above a key level. And right here, I will make another call, which is I want to see GU take this low into this fair value gap, and Euro USD make an SMT a failure swing, and then go up again together. And let me make it now clear about why that. What have we done here? We come from internal range liquidity, sorry, this or OB, sponsoring a move up to our external drawn liquidity, we engineer a liquidity pool above our internal range liquidity key level, which is a fair value gap. This is why I want to see internal move to external move to next to internal and to external. It's always like this. You can see it on every market, on every time frame, but you always must follow the higher time frame order flow. If you see gold is a perfect example of how the draw on liquidity works. We take external range liquidity and we need internal, which will be inside of this leg, to sponsor a move up. Once we get this move, we get what? We get external out right here to internal sponsorship to go higher, and we take what? We take external to come back to internal to get another external to get back into another internal to get external, and guess what will happen? This is Monday. Monday maybe will be our range. Thursday soup it, close back inside. Wednesday open low into this key level, SMT with silver. This will be a failure swing, and continue up our external move. So you must always remember this. Once you take an external, you will see internal hit 100%, because it's just simply how the markets work. You can't expect just to drop down. This is why always once you get a big liquidity pool, you see a retracement, because you take external liquidity to internal liquidity to then external liquidity to then again internal, and this is the whole sequence. And you use the same sequence until the order flow is flipped. So how do you know what happens? Once I want to see the SMT with this low with Geo, we might have something like this, and this is a high that took a low SMT. Once we flip this high, I would search for internal liquidity, which is a key level inside this leg, to sponsor the next moves up. And basically, another way is to use the closing of candles to decide what the next candle will do. But in order to do that, you always must add in your list a key level. You can't use close above higher prices or close below lower prices, or wick above lower and wick below higher, without a key level. In this case, this will be just a pattern trading, and you will simply fail. Like, let's see, right here, we have close above. Yeah, why didn't this candle go up? Because the context of our weekly candle is to be bearish. Why? Because we took out a monthly liquidity pool, we created a valid order block, a valid swing point, which have to hold if we are bearish already. And we did what? As this lower time frame is external, we come back to internal, which is the only FVG, and once we balance this inefficiency and we break below the low, our order flow is confirmed to be changed until proven otherwise. And once we take the external range liquidity, we come back to our internal range liquidity, in this case the fair value gap, or the change in state of delivery candles, to do an external move right here, and now we need internal to go down, and this is my range that I look at, and what I want to use is this as my key level right here. Tap this as internal liquidity pool, SMT with geo, if possible this will be perfect, and then go down into SMT right here to start the move up. I hope this will help you. I want you, if you stayed this long, to go find me 5 examples. Don't be lazy, please. Don't be lazy, because I spent time to give you free value made simply for you, and I want to start implementing the logic of this. So go and find me 5 examples, just 5, no more, and send them to my DM in my Telegram, which is z_speculate. For now, this is what I had to say about the draw on liquidity. Next lectures will be about important topics. I will choose to make a video for either key levels or entry models and how to enter, because it's okay to be analyst, but you have to become a trader one day. And now go subscribe. My target is to make 1,500 subscribers until the end of the month. We are 300 now, and I think we can do it. So go subscribe, like the video, share it in some groups, help me grow, and let's grow together.